Good morning. Today is Tuesday, March 5th, 2024. I'm Joe Terrell, President of Terrell & Company, Private Wealth Managers in St. Louis, Missouri. Joining me is Russ Phillips, Senior Portfolio Manager and one of our investment committee members. And we're here to update you on our thoughts on investment markets, the economy, interest rates, inflation, etc. As we have been saying for the past year at least, we are continuing to be in the camp of a strong economy, inflation problem not yet solved, but most importantly, a Federal Reserve Bank that is not going to cut interest rates. And we'll see throughout this year of 2024 if the Federal Reserve Bank isn't more inclined to leave interest rates unchanged. We are invested in portfolios for that. We continue to stay very short in our maturities in fixed income, and we are positioned more towards equities that fit into that interest rates are higher for longer. We are very skeptical of the high-tech rally that some of these companies are seeing, all based upon artificial intelligence, AI, if you will. And we are noticing that for the first time in quite some time, that perhaps the S&P 493, and we mean that because the Magnificent Seven stocks have dominated the averages up to this point, but it looks like maybe the S&P 493 may be breaking out. We previously have seen 7 stocks overvalued, 493 undervalued. We have been buying the 493. We're finally seeing those stocks begin to participate and outperform. Is it a head fake or is it going to continue? We'll see as time rolls along. Russ, I'm going to ask you to talk a little bit about where things have been since January of 2022, because a lot of these averages actually are unchanged for the last 2 years and 2 months. And then when you're finished, I want to sum up where I think those averages will be by the end of this year. But why don't you give us some of the stats based upon what's happened for the last 26 months?
Sure, Joe, thank you. Since January 3rd of 2022, if you look at the Triple Q ETF, NASDAQ 100, you will see that on a price basis, it's only up about, and this is through yesterday, up about 10%. The S&P's up about 7%. You're talking about the S&P 493, which would be the equal weighted S&P, being flat since January 3rd of 2022. And you add into that low volatility stocks actually being down about 5.5% on a price basis. So I think your thesis and your comments are dead on. Technology has been the only game in town really since January 3rd of 2022.
Do you think the recent moves in Apple and Tesla and maybe even a Google is the beginning of a major retreat for technology stocks?
I would say definitely you're seeing cracks in the technology sector specifically. You mentioned Tesla, Apple having some trouble. Both those guys are having trouble in China specifically. And so yes, I think your 493 thesis is an area we continue to see there being value, and we're continuing to look to find those companies.
I'm going to make a prediction here and a comment, and then I'm going to come back to you to see just how far you think I might be sticking my neck out. We were talking about the fact that some of these averages for the last 2 years, 2 months have not performed haven't provided any rate of return. I think you can throw some of the bond market fixed income averages in there, and it's the same situation, no performance, no rate of return. My prediction, by the end of this year, prices will be lower than what they are right now on most equity and fixed income averages, and we'll be looking at it completing 3 years worth of basically no returns. Is that possible, or is that no way that's going to happen? What's your thought?
I think there's definitely a possibility that could happen. You're seeing that here in the first couple of months, we've got a year's worth of returns. Definitely there could be the case where the markets and averages, especially if the tech stocks start to underperform, stay flat or trade down.
Well, I just think the markets are not set up for higher interest rates. The markets are still hanging on, we're going to see interest rates move lower, particularly in fixed income. The 10 years at a 4.15 yield. One of the major investment banks this week was predicting 5% or more by the end of the year. I tend to agree with them. But the other comment that we'll make is gold is finally breaking out. We've been proponents of gold, set a all-time record high yesterday. We look for that trend to continue. So we'll wrap it up for right now, and Brian Curtis, our producer, thank you, Brian, and we'll be back in a couple of weeks with another update. Thank you for tuning in.